Wondering what budget announcements matter to you as a small business owner? Well, watch on. As a team of business accountants, my team and I spend all day long helping business owners on their journey, and the budget is always a fairly exciting time of year. Sometimes can be exciting, sometimes can be sort of like sitting there nail biting, seeing what is coming. And actually, I think this budget felt a little bit like that. We were a bit concerned about what could come out in terms of extra stress in the small business world. Now, if you don't know what the budget is, you don't know why it's important, you probably wouldn't have started to watch this video, but if you do want some more information on that, make sure to check out a previous video we did on why you should care about the budget. But what I've done is there's a lot of announcements in a budget that do affect household incomes and things like that. I tend to ignore those for the purposes of these videos. What I want to know is, for the small business owner, what are the highlights? Now, what I should say is that this particular one, there wasn't tons of information in it, so hopefully it's going to be a short video. There weren't too many changes, but I'm also going to recap some recent sort of announcements that do impact on your pocket and your business's pocket for sure. So before we get into it, if you like these type of videos, make sure to click the subscribe button below so you get notified whenever we release more videos just like this. So let's talk about it. Budget announcements. What was the main things? Well, there's a few things. Let's start off with if you're an employer. So if you have people in your team, the national living wage, which is the wage that applies to people over 23, are going to be going up. So it's going to jump to, it's just under £9 at the moment. It's going to be going up to £9.50 from April. Now, I think for most employers, £9.50 is not a crazy sum of money. The issue tends to be is you've got people down here at say like £9, and then you've got somebody at 10. Now, if you have to bump the person up from £9.50, 50p difference, does it feel right? It's that kind of impact. It's what happens further up the scale. Now, that can be quite an impact. So you've got that. That's going to be quite a big cost issue. If you've got a lot of people around that time, it does add a bit of money on top of each person's wages. So definitely factor that into your costs. And I'm going to ping back to this because this, along with another couple of costs, mean it's quite a tough year ahead if you don't do anything with your pricing, so we'll come back to that. However, the good news front, if you're looking to invest in equipment, there was always something, well I say always, in recent memory, there was something called annual investment allowance. Now if you're buying big bits of equipment, I always use the example of a new MacBook for your office or something like that, then you're going to be able to claim 100% tax relief in that year. That has been around for a while, but they were going to drop the limit. Now for many small businesses, this limit won't make much difference. It was £1 million and is £1 million. They were going to drop per year. They were going to drop it to 200,000. They've scrapped that and said, no, we're going to keep it. Fine, it's not going to affect the majority of you, but I know, say for like transport companies and people that buy a lot of big stuff, that can actually, it does really have an impact. We've certainly seen it with a couple of our clients. So that's good news. But many limited companies will be using the new super deduction. So if you don't know what that is, there's another video on it, but you're probably, if you buy new stuff, you're going to use this super deduction instead, because instead of 100% tax relief, you're likely going to get 130%. But for where that's not available, this AIA, as they know, this annual investment allowance, that cap, that you can still spend a lot of money and still get it all. So that's kind of good news for those slightly bigger small business. And then for those of you with premises, let's talk business rates. Now, business rates is always an issue. I know personally, I have an issue with these. You pay massive sums of money for what seems like no real reason. It's effectively a tax in a lot of ways. So, but that business rates has been an issue throughout the whole of lockdown. But before that, it was a big issue. All the Federation of Small Business and a lot of groups were lobbying for some sort of reform on the system. And the way your bill's normally calculated is you get two sort of factors in it. You get what they call a rates multiplier, and you get a rateable value. So they kind of decide roughly what your rateable value is of the building. So it could be like 20 grand, and then they apply a multiplier to it, and that gives you your bill. What they've said is they're going to freeze that multiplier, so it's not going to move, so it's not going to go up, it's not going to go down, and then they've said they're going to change the revaluations of your rateable value to every 3 years from 5. So in theory, it's going to be slightly more accurate. Now, if you're in the retail, hospitality and leisure industry, you're going to get an extra 50% discount on that bill over the year, which is going to be good, and that's going to go until the 31st of March 23, and that's in line with that multiplier freeze. That's also going to go to March 23. So business rates, it's kind of neither good nor bad news, but if you're in the hospitality, retail and leisure industry, that's pretty good news for you. Now, while we're on the subject of property, it's probably a good time to say, and this isn't particularly for business owners, but a lot of business owners do have property interests, and I'm going to throw property businesses in with businesses, which is a dangerous thing to do from a tax perspective, but let's just think of it how most people would view it. If you're going to sell a property this year, a residential property that has got a gain on it, so you're making a profit on it, you're likely to have to report that straight away to the revenue. It's been like this. They changed it in April 2020. So if you did this, if you sold, let's say you sold a buy-to-let and it had a chargeable gain on it, so you were going to have to pay some capital gains tax, you only had 30 days from completion to sign up for this extra tax return, declare that profit and pay that tax all within 30 days. That is ridiculously tight timescale, to the point where it's almost unachievable. In fact, most people who came to us, I think came to us like with 2 days to go, and then they realised they needed to do something, so they were never going to file it. And I think all the feedback to revenue has been it's stupid. So they've changed it. It's now going to be 60 days. So there's a bit of success for you. So if you have got property, think in your head, I need to speak to an accountant, or if you're going to try it yourself, there's a overly convoluted online system that you can use and do that as well. So yeah, just bear that in mind. Selling property, think tax return. Now, if your business is looking to invest in research and development, and if you've not come across that, I think we're going to do some videos soon to talk to you a little bit more about that. But I don't want you to think guys and girls in lab coats. It's actually just, if you're developing new products, quite often this R&D tax credit, research and development tax credit relief, is a really good relief. And you'd be surprised the amount of things it can be used for. And it's a really good thing for limited companies. And basically what they've said with this particular relief is actually there's some things in there that we weren't giving you credit for, we're going to give you credit for. So the further detail and the rules aren't out yet, but data, cloud accounting, that's me talking, cloud computing, those kind of costs, they're all going to now be included. Again, we don't know the exact detail. And there was talk in the speech, although the detail again is very light, on only being able to claim R&D relief on UK-based activity. We don't quite know what that means yet, but I think what they were concerned about was UK companies basically investing in offshore services to help their R&D, but they didn't really like the idea of that. I think they wanted to keep it all within the UK. So, but again, we don't know what the detail of that looks like yet. But if you've got a lot of R&D spend that's abroad, that might be a little bit of a worry for you on that. So, but the overall is the system's not changing, which is good. I think everybody's a bit shaky every time they mention R&D because it's an amazing system, but it doesn't appear that there's any big changes outside of that. There all seem to be relatively positive changes. So that's good. And then two quick ones. We've got the recovery loan scheme. So many businesses won't have used this yet. I think with bounce back loans, when that came out, it's very easy to have access to easy capital. So most people could go and borrow around up to 50k quite easily from their bank, no hassle, no questions asked, to lots of fraudsters' delight. But there was another scheme called the recovery loan scheme brought in later, and it married up with something they tried to do early on in the pandemic, which meant that if you needed money, but you could prove that outside of the pandemic your business was still viable, you could borrow in the normal way, but the benefit was that it was quite cheap and that you didn't end up having to sign a personal guarantee as a director on your limited company or as a sole trader. You didn't have to sign your house away. They couldn't recover that. And that's good because obviously it's designed for a bit of safety net. So, and that scheme's been extended for 6 months. So if you do need some money, definitely look at those because they are, as I say, relatively cheap, no personal guarantee attached. So, and that was one of the things they didn't announce actually in the budget speech, but I think it's quite a big piece. So that's great news. And finally, something I want to remind you about is the health and social care levy. Now, this wasn't a budget announcement, but it was so close to the budget and we haven't yet done a video on it this time. And that's to say that they have introduced this new sort of tax really, or levy as they're calling it, from April next year. And that's going to be a 1.25% rise in dividend tax and national insurance. So I think the reason they did dividend tax is to make sure it felt roughly in line with what was happening with the national insurance, because again, without getting too deep into it, you don't tend to pay national insurance on dividends. We don't pay any national insurance, in fact, on dividends. So that's the reason they've done it, to marry the two. So there will be an increase. So going back to what I said before, where as an employer, you're going to have wage increases. You've got an employer's national insurance increase as well of 1.25%, and then your own money when it finally comes out is also going to have a 1.25% rise on it. And on top of that, going back a bit longer, they announced in the earlier in the year that the corporation tax rate is jumping quite substantially to up to 25% from 19, albeit for a lot of small businesses it's still going to be around 19 and there's rates in between. It's a bit complex, but not a lot of small businesses are going to end up paying the full 25%, but either way it's a rise. So all those three things is going to be quite an impact on you. So do think about your pricing is probably the takeaway from this at this point if you're in that kind of zone. And there we go, and that's the major announcements. Few and far between, but depending where you are, and there's a couple of niche things I think that would be quite important. So please do share this video with people you think need to know this info, and I'll see you in the next one.